Come on.
Guys need to know, should they be shaving them?
It's sexier if it's trimmed.
Our lawnmower 3.0, it is...
Come on.
Guys need to know, should they be shaving them?
It's sexier if it's trimmed.
Our lawnmower 3.0.
What up? Let's get into it. Got another one planned.
YouTube, what up?
Crazy. Hope everybody's staying safe out there.
We live. We here. The Earn Your Leisure team is here. You got my votes, no? There you go.
What's up? We about to get into it. Start our third Market Mondays with the great legend, Ian Dunlap himself.
EYL Ian, that's what he's going by now. He said officially he's EYL Ian, so we running with that. What up? Joseph, what up?
Yeah. Let my boy get in here, and we're going to get it going.
Got some things to talk about.
There's a lot going on right now. That's the good thing with having a stock market show is that
Janet, what up?
There's always something to talk about. There's never like not anything to talk about. There's always something to talk about.
Yeah, that's a fact.
And it's always changing. It's always changing too. So
it's a big week we got ahead of us too. So we're gonna get into that.
For sure. Yeah, we got a lot.
Eric Gonzalez, what's up, kid?
We got a lot to cover today. And first and foremost, thank you all for supporting Market Mondays. We're off to a tremendous start, and this is just the beginning. We just getting started. So we got a lot to look forward to. What's today's date? 28th?
Today the 27th. Ken, what up? Everett, what's going on? Daniel, what's up, kid?
I'm gonna give the rundown in a minute for the weekly schedule that we got.
I told y'all, May is coming.
For EYLU.
There you go.
What's up?
Doing? Yeah, I was trying to log into my phone, but I couldn't do it. How y'all doing?
Let me get you up there. Diane, what's going on? Somebody said good morning. So good morning wherever you are. Good evening wherever you are, and good night to wherever you are. We're going to cover all things.
That means Diane, what's going on? They on the other. What's up, bro?
How you doing, man?
Doing good, man. How's everything?
Good. It's been a long day. Good Lord, it's been a long day. I'm happy to be here, though.
Yeah, man. It's a pleasure. 3 weeks. Time flies.
Yeah, it goes by quick.
Yeah, I told you on Instagram last week, you're a busy man. You all over the place doing Instagram lives. And
most wanted,
man. Yeah. It's interesting because people are getting to see me in real time be less fearful and execute more. So even before an investor, like I was an entrepreneur first. So any piece of advice I give to people, I'm living it. So whether you think it's perfect or not, you get to see me execute at a high level. And I'm still not comfortable on camera, but the accountability of having to be here pushes it to a different level.
That's it. I tell people all the time that the best way to really overcome fear is to face it. And like, whether it's public speaking, whether it's, we got to get out of our comfort zone. So to see people might look at you and it's like, oh, this is natural. But, for you to say that, I'm sure it's encouraging to people and kind of gives them some motivation and to move forward.
Yeah, I told people, man, and I think we spoke about this last time, 5 months ago, I couldn't find a picture of you on Instagram. It was just the work. It was just the work.
I just want to
now every time I go on Instagram, you're going live with somebody new. You got a new, yo, man, you IG's most wanted right now, boy.
That's funny. Yeah, even when I was talking to my guy, Donnie, shout out Donnie, he models, and I did an IG live with him, and people was like, oh, he a little bit shy. I'm like, the persona is different than who he is. So some of us just really want to focus on the work, but this has become a part of the work. So, and that's why I admire Diddy, Ho, 50, who can do both very well, or Jamie Foxx, who can master the craft and the public part of it, the public facing part. So, but yeah, I appreciate it. I appreciate that boost. I don't want to let y'all down.
Nah, you good. So yeah, we're gonna get into it. I'm gonna give the outline of the what?
Oh, wait, I got it.
I'm gonna get an outline to everybody what's going on. So as we did last time, we'll break it up into 3 different segments. So we'll talk about 3 different things. And then we'll talk about other stuff in between there as well, take some questions. But we're going to talk about, 3 different things. I won't even let the cat out the bag about what we're going to talk about. We're going to talk about 3 different things. And like I said, we're going to take some questions. Try to have the questions geared towards like investments or like investment strategy or general investment advice, not really individual stocks. That's why we kind of broke it up into 3 different segments, so we can talk about like 3 different stocks or 3 different investments, because it kind of drags the conversation out if we have to actually talk about like 1,000,001 different companies. So yeah, and then once again, EYL University members, make sure you use the Zoom, raise your hand, and that's the way we call. I just noticed you're not in front of the computers
That's
today.
what I said, man. I'm looking at that, man. What's going on?
Been a long day. I've been up since like 6:30, so my eyes tired from even looking at them. I'm happy to get a break away from it.
Yeah, man. Eyes starting to burn. It's a big week, so we're gonna get into some things.
All right. So first, EYL University. Shout out to y'all. We're gonna give you the rundown of what's going on this week. So on April 28th, Matt is having a Bay Area market update for real estate.
Yep.
That's for the private real estate group. And then on Wednesday, we have Brand Resumes. Shout out to Brandon Mitchell.
He's coming through.
Yeah, he's gonna do a webinar for how to re-enter the job force during the age of Corona.
Planning for post-COVID job market. So be in tune for that. A lot of people, we saw the unemployment rate was 26 million last week. It'll probably go up this week again. So planning to, when we come out of that, what it's going to look like for the job market.
Yeah, then Friday, Matt's back with Break Bread session at 2 p.m. That's like a networking event for our private real estate group, and we go over different topics. And then Thursday, we got the legend himself.
Big time.
Yeah, that's a big one. Lord of the Slums. Shout out to my man Fernando. If you check that episode out, you know Lord of the Slums is a legend. He has like 400 rental properties in Jersey. So he's coming on YouTube with us on Thursday. So that's the rundown for EYLU.
Yeah. That's the last time we saw him do any social media, really, besides just putting up posts.
He doesn't do interviews. He doesn't do any interviews, only for Earn Your Leisure. So
that's our guy.
Shout out to my man Fernando, man. It's a true legend right there. So yes, once again, that's for the private Facebook group and the EYL University. And if you're interested, that's 3 days left, right?
Yeah, May 1st.
May 1st, the price is going up for EYL University.
Told y'all.
And yeah, so that's the deal with that. But if you're interested, I'll put it in here, and then hopefully we can see you guys in there for some of these classes that we offer. So Ian, let's get into it.
Let's go.
You made an interesting post today about GM, and you said that GM stopped dividends, right?
Yeah.
And it's interesting because we talked about dividends before. So GM is an interesting stock actually, because when I looked at their chart, you talk about charts a lot. When I looked at their chart, it's 52-week low was $14. The 52-week high was 41, but now it's at 22. So it's like 50% off. So theoretically, you would think that's a good deal. But the 5-year chart looks terrible. The 5-year chart is like
horrible.
This. So GM stopping dividends. What does that mean? What's the deal with that?
I told you before that dividends are great if the company is going up. GM has been falling, so those payments aren't able to be made because the company is hurting. I don't like any automotive companies at all, with the exception of Tesla, and that's only because it's a tech company. So the thing I want to stress to you guys more than anything, investing isn't hard if you follow the same principles and you stick to a few. But GM, if you look at it over the last, so the high was in 2017, 46.76. It's been sliding down ever since then. Sales are not good. People are going to default a little bit more if the economy stays closed. Automotive, like I said before, anything with an engine, I don't love to invest in. So I'm not surprised that this fell along with Ford and a couple others.
Yeah. I was going to say that. We know that company that we love talking about, Ford. They suspended theirs in March. GM did it today. Typically, how long do suspensions last, or can they just forever just say we're not paying out dividends? Is that something that's possible?
Technically, they could, but I mean, the economy eventually they're starting to reopen business now. So I'm assuming within 3 or 4 months, the dividend will be back in play. But when a company is bleeding out, sales are down, and the stock isn't going up, it's like if you're dating and the economy goes bad and your money dries up, you and your bae can't go on vacation every month, and you can't take her shopping every weekend. It's the same kind of principle here. They're having some cash flow and sales issues, so they can't pay out their dividend. And I've always told you guys, I'm not a huge fan of dividend-driven companies. I want the value to come from the stock actually going up first.
They also suspended stock buybacks. Can you explain what that is? Because that came up actually in our private real estate group yesterday. when companies first got bailed out in the 08, 09 crisis, part of the things they were doing were paying themselves and doing stock buybacks. So you explain that process?
Yeah, but once you go through that stock buyback, like for most of the listeners here, it doesn't affect their investing decisions. So it's one of those areas where it sounds important, but for your overall investment strategy, it really doesn't matter. So for the stock club members, I'll be happy to address that, but on an open platform, in the grand scheme of things, honestly, it really doesn't matter.
Okay.
It really doesn't matter.
Yeah, dividends. So is this why you're not a fan of investing in dividend, like a company just for dividends? Because they can stop.
Yes.
Is that the primary reason why you don't like?
Yeah, because if the company's falling apart, then there's no reason to invest in it. I want it to be a stock that is going up. Plus, I can get a dividend, not a good dividend, and it falls down. So I don't want to go dividend first. And I know a lot of people criticize it, but if you look at the popular dividends that pay high, if they continue to drag down, you hate them holding them in your portfolio over a 3-4 year period. So
we are going to some questions from EYL University. Joshua.
We unmuted you. The floor is yours, Josh. Go ahead. Unmute yourself.
Josh, how are you?
Josh, no, I never seen.
Josh, unmute yourself. We'll go to Sabrina.
Sabrina, what's going on?
Sabrina.
Josh trying to figure it out.
I was just saying what's up. I didn't mean to wave. I was just saying what's up.
Oh, it's all good. What's
What's
up?
going on?
We appreciate you. Thank you. We got Jonathan. We got a bunch of questions.
Yeah, that's great. Josine, I hope I got this right. Josine, you are unmuted. The floor is yours. Unmute yourself.
What are you looking at?
Josine, you there?
Yes, I'm in.
What's going on?
Not much here in Los Angeles. 85 degrees. Woohoo!
Thanks for rubbing that in.
Living a good life. Living a good life.
Okay,
You got a question?
I just started out. I've been watching you guys for a long time. I kind of want to divide myself in part. What would be some stocks to start out if you're only going to spend like maybe a couple $100s to kind of get your feet wet?
I would suggest to watch the podcast episode because everybody's situation is different, and we don't want to like give like general stock advice like buy these stocks. But we went over a few stocks in that. So if you're not a member of Ian Stock Club, episode 70, that's like geared towards that, and we actually said a few. So yeah, I would suggest go when you get a chance, watch episode 70. We actually went over a few. But like I said, it's kind of a tricky slope because everybody's situation is different. So we have to kind of know a little bit more about the situation. Just recommend the stock.
Yeah.
Okay.
Thank you for your support. Appreciate you.
Thank you, Josine.
Thank you.
Stay warm.
Lean towards technology.
Say it again, Ian.
Lean heavily towards technology.
Yeah, I mean, we've been saying that for the past 2 or 3 weeks now. Kenneth, I'm coming to you. You are unmuted. Unmute yourself. Go ahead.
Hey, I had a quick question. Setting up retirement accounts or UTMA accounts for our nieces and nephews. Quick question, should we focus on target retirement funds, like target date retirement funds, or look at legacy stocks that we've talked about in the stock market or in the stock club?
Good question. Good question. Ian, before you answer that, I'll just reference it for anybody that's not familiar with what he's referring to. So we talked about this before, but a lot of times with retirement accounts and even college savings funds like 529s, you have different ways how you can choose to invest. And one of the more popular ways is like what they call target dates. So for 401k, it's like 2020, 2030, 2040. And the theory is that it's aggressive when you're young. And as you get closer to retirement, it becomes more conservative. The same thing you can do with a college savings plan, like a 529, where it's more age-based. So they have like from 0 to 5 years old is very aggressive. From 5 to 10 is aggressive. From 10 to 15 is moderately aggressive. And 15 to 20 is conservative. So it's the same type of idea, principle, but one is for the retirement, one is for the kids. So yeah, I just wanted everybody just to kind of have a general idea of what the question was. So yeah, Ian, I'll let you answer it from here.
I mean, you hit the nail on the head. Both are good. It depends on what kind of growth you want. But if you're starting young, target dated are more than, okay, I commend you for doing anything because most parents don't invest for the children. But if you want to do legacy, that's fine. If you want to go target dated, that's fine. But both are better than doing absolutely nothing. I mean, if you want to shoot me a note and ask, I can give you a more detailed answer. I'm not going to charge you for it, so don't worry about that. But unless you're looking for like super aggressive growth for your child, target dated is okay.
And we actually talked about that, and shout out to Trapper. We spoke about that on his episode. The UTMA and the UGMA. So a lot of time for parents, they want to save for college. So this is something that we haven't spoke about, but since you asked the question, we can go into it. 529 plan is a way to save for your child's college education. Not just education, they actually changed that where you can save for any form of education. Yeah. So whether it's private school, junior college, trade school, anything like that. And the benefit is that the money that you use is tax-free. You don't pay taxes on it as long as you use it for education. But the UTMA and UGMA, they have more flexibility as far as like what you can use the money for. You can use it for a variety of different things. So some people have a preference over the 529. Some people have a preference over the UTMA or the UGMA. It really just depends. But if you're looking to save money, those are like three popular ways with the UTMA, the UGMA, 529. Yeah. And the 529 is like solely for education, with the other two you can use for a variety of other things.
Yeah, if you're in education, you know they walk around your building every quarter. They send those people in talking about the 529 plan. Yo, Kenneth, thank you. Appreciate that question.
Yeah, and the most important thing I want to stress is taking the action early, because the earlier you get started, the more you'll have. The number one reason why I only talk about investing, because the biggest mistake that I made was not investing enough. And so people wait so long. Most people act like an African-American community, they get started like at 42. And it's like you've lost a ton of gains. Even if you were invested in not so great companies, you missed out on gains on the upside from starting so late. So I commend you for starting early, but execution is better than battling over one over the other.
Yeah, for sure. And another thing with the 529 is that it could be state tax deductible too. So depending on what state you live in. So like New York is not state tax deductible, but if you live in New Jersey, if you invest in a New Jersey state 529 plan and you're a New Jersey resident, you get a state tax deduction for that. So without getting too complicated, there's like 50 different 529 plans, and they're all sponsored by different states. So it's like North Dakota's 529, New Jersey, New York, Texas, and you can invest in any one that you want. But in order to get the state tax deduction, you have to invest in the state that you live in. So I say that to say it might be a way, if you're looking to save some money on your state taxes. Every dollar counts. It's not a federal tax deduction, but like I said, depending on what state you live in, you could potentially get a state tax deduction if you put money into the 529 plan in the state.
Simplistic Grace, the questions that are coming from Zoom are EYL University members. That's why you hear their voices. We do take YouTube questions. We're going to get those rolled in too. I see you asking that. We're going to take some YouTube questions.
Yeah, we're going to take some YouTube. But yeah, Zoom has the first right. That's EYL University members. And once again, we're running the sale, 60% off. EYL149 is the code. If you're interested, that gives you access to EYL University and our private real estate Facebook group and a whole bunch of other stuff. We got another question?
Let's go to Pete.
Pete, what's going on?
Unmute yourself, Pete.
Hey, can you guys hear me?
Yeah, we hear you perfect, man.
Okay, great. First of all, I want to tell you guys, I love you guys, man, because all of this information that you guys are putting out is great.
Appreciate you, bro.
Yeah, I appreciate that.
So, Ian, my question to you was with what Rashad was talking about earlier. Is there a book you would recommend to improve on those points?
Which points are you referring to?
The one Rashad had mentioned earlier, what we were going to be discussing tonight. I didn't get to write those down. He shot them off real quick.
I don't know if it's a specific book, because I talked about just different things that we're going to be talking. I didn't even say what we were going to talk about, actually.
Yeah, we only start with dividend payments.
Yeah,
you ain't missed nothing yet.
Yeah, no, you ain't missed anything yet. I didn't even mention what we was going to talk about yet.
Okay. Well, what it sounded like you were going to talk about is like what to look for in stocks and everything like that. So that's what I was asking.
I could recommend a book, and I'm sure Ian has another book as well, but How to Make Money in Stocks by William O'Neill is one of the first books that I actually ever read in regards to stocks. And that's a great book. That is an excellent book, actually. And it talks about a variety of different things. And I personally read that book years ago when I was first learning about stocks. So I recommend that book all the time to people that's just getting into the stock market. It's called How to Make Money in Stocks by William O'Neill. That's one of my own personal favorites.
And then I recommend too, Trend Following. It's by Michael Covell, I believe, and then Complete Turtle Traders. So Trend Following and Complete Turtle Traders, both are good. Both are good.
All right, appreciate it. Thank you, guys.
Appreciate you, Pete.
Appreciate you. Shout out to Shat on a super chat.
Shat, what up? Royce Wheeler,
We got
the floor is yours. Unmute yourself, kid.
And before Shaq, we're gonna do an episode on options because that's a little bit more involved conversation. But a lot of people have been asking about options, so we will cover options in detail soon, very soon. Royce.
Hey, what's going on? What's going on? I don't know if you guys have talked about this, or maybe if you guys did, I missed it. But I wouldn't want to know, how does he feel about REITs? I've always been real big on REITs and dividend stock, but REITs have been, that's something that I've always kind of invested in. And lately, of course, they haven't been doing too good. So what's the feeling as far as those?
Give me a ticker for one that you like, and I'll look at it right now.
Okay. On Instagram? Send it to you on Instagram?
No, tell me right now.
Oh, let me see. Oh man.
Why are you looking up the ticker? What's your general feeling on REITs?
Generally, I don't like them, especially in today's climate because they've been getting beat up so bad. Once again, if you can hold them for 5 years, great. But there's other things that you can invest in the interim that will give you a much better return than most REITs out there right now.
Federal Realty Investment Trust.
What's the
one.
What's the ticker?
FRT.
Give me 1 second. Let me look at the 10. I don't love it. I mean, if you can afford to hold it for long term, the thing is, even if I'm looking at it right now, for my technical traders, it's under the 100 moving average, way under the 200. It's not good right now. If you can hold it for 3 or 4 years, it'll get back to 130. But there's other things you can invest in right now that'll give you a better bang for your buck.
All good, all good. Yeah, I'm a big dividend stock guy, so I just like to keep a portfolio with number of dividends and just kind of let it sit. So REITs have been my big thing, but I'll definitely be looking towards some other dividend stock. I appreciate it.
I appreciate you.
Thank you, bro. Yeah, another thing with the REITs is that a lot of those REITs are invested heavily in commercial, well, mostly all of them, commercial real estate. And we all know that commercial real estate has taken a beating even more than, other types of real estate. So that's definitely going to be, negative, obviously, for REITs, is because commercial real estate is getting throttled right now.
Yeah, and for everyone watching, I don't hate or love anything. I'm not biased. I just want to invest in things that make me money. So I know some of you guys are like, well, you don't like this sector or that. If it were produced for me, I'll make money. If I can short it, great. But I know most people don't know how to short. So if I give you a long-term take, it's only because I don't like it to hold it in my portfolio for 2-3 years because it's not going up.
Appreciate that.
Appreciate that.
Nice show. We coming to you. You are unmuted. Unmute yourself.
Hello.
What's up, Nichelle?
Hey, how you doing?
Nichelle. It's Nichelle. Thanks.
How you doing, Nichelle?
I'm good. Thank you. So I just started investing in March, actually right when the pandemic started, because I saw that it was an opportunity. Yes. And I've gained about 21% in the past 6 weeks, which is pretty good, I think, as a new investor.
That's incredible.
Excellent.
That's more than pretty good. That's excellent. Don't be modest.
But the thing is, I started on Cash App, and I want to move on to another platform, and I don't really know how to do that without cashing out.
You can start with TD Ameritrade. Any broker that you go to, they have tutorials. So if you go to Fidelity, go to Vanguard, go to TD Ameritrade, and just hit YouTube and put in tutorial, they'll be happy to guide you. And if you sign up for an account, they'll be happy to walk you through as well. But you illustrate a good point. It's better to get started on a simple platform opposed to have something that's really complicated that you don't know how to use. I know you probably take that percentage for granted. Most hedge funds and produce 21%. So you did amazing. But if you go to YouTube, you'll be able to find a tutorial on how to set everything up if you need it.
That's a good great. About that. Ian, are there transaction fees when you go from platform to platform?
Can be. It depends on what platform you go to, but I think if she also can keep the money in there and just open up another brokerage.
That's what I was going to say. It's probably easier to do that. Like if you have whatever amount of money you have at that account, but you want to have Fidelity or TD, you want to have a more advanced now. Just get it and just sell it whenever you're ready to sell it. But until then, just open up the new one and then just put the new money into the new one, as opposed to trying to transfer it over and kind of probably not even worth it.
Because even for me, like I don't love Robinhood as a primary app unless you're a beginner, because I like TD Ameritrade. But if I'm out, I'll buy something on Robinhood just because I have it easy in my phone and I can access it and just buy right away and do a market order. So I know a lot of people want to compare brokerages. Some are better than others, but the execution point of starting is the most important thing. So if you're getting 21% on Cash App, I can only imagine where you would be in a year if you go to Fidelity or Vanguard or somewhere like that. So
Awesome. Thank you so much.
Thank you, Michelle.
Thank you.
Yeah, we on fire. Duncan, I've unmuted you. The floor is yours. Unmute yourself.
Hey, how y'all doing this evening, gentlemen?
Duncan, what's going on?
Good. How you doing? Where you calling from?
I'm calling from Texas, but I'm originally from Miami.
Okay, what part of Texas?
I'm in Dallas.
Okay, that's not too far from Ian, right? Ian?
Yeah, not too far. It's about 3-4 hours away.
Yeah, shout out to Duncan. He's part of our private real estate group as well. What's up, Duncan?
Yeah, shout out to the real estate group.
Yeah.
I wanted to ask Ian just a question. I've seen a lot on the news that Boeing is going to put out their earnings on Wednesday. And I just wanted to get your general feelings about what you think they're going to do, maybe go up or go down. I've kind of saw them on the 5-year and seen what they've been doing, but I know I'm not going to get in at such a price point as I think Rashad was able to get into.
We all know that price point.
The thing about earnings is I try to never guess which direction it's going to go, because sometimes earnings can report positive and the company will slide down, just like how the jobless claims came out and the market pushed up. I try to never guess. I try to just know what price I want to get in at. So if you can get Boeing under 100, take a stab at it. Please take a stab at it.
I appreciate the advice.
You're welcome.
All right, Duncan, appreciate you, bro.
Thank you, Duncan. Appreciate it.
Oh man, Linda, we coming to you.
Linda, what's going on?
What's going on?
Hello. Hi.
What's up, Linda?
Linda, how are you?
I'm good. First, I want to say is that I did transfer my account from Robinhood to Ameritrade, and they transferred. They refunded me the transfer fee because I showed them a statement. So for the last caller. Also, I read an article. I kind of skimmed through an article. Hopefully, you can answer the question. They were saying something about Warren Buffett and his company that they had to report in. There's 2 dates that are important that he had to report in May and the beginning of May and the middle of May. And somehow through that reporting, it would help you like kind of figure out what companies to look for. Sort of like, I think companies that he may be investing in or dumping.
Yeah.
Something about that?
Yeah, people love to look at Buffett's portfolio to get a competitive edge to see what you should be investing in. I mean, he's a heavy investor in Apple. You can't do that. If you just go to Google and look at the companies that he's invested in, it'll give you a good heads up to what you can be looking at. Now, though, his strategy is a little bit different, so you can't model it company for company, but the top ones in there, you can look to see based on percentage which ones you have. And you know I love Apple already, so that's one of the ones in there. If you don't have it, you should look to add to your portfolio.
And I heard that with the Berkshire company, there's A and B, and that B is just the same, it's just more affordable. Is that also true? Because I was looking and investing in that too.
Similar. I know people love Berkshire. I mean, A is super expensive. B is a lot more affordable. Let me look at A right now. Yeah, A is the price of a house. B is a lot more affordable, but I would say you're better off investing in some of the tech ones. But if you add it, it's not a bad company to add to your portfolio.
Okay.
And also, lastly, you should read his annual letter, because that'll give you some good insights on what he's thinking about the upcoming year as well.
He's having a meeting next week, isn't it?
I believe so. Either next week or 2 weeks from now, yeah.
Yeah, I think so. I thought I heard that on CNBC this morning.
Thank you, guys.
Thank you. And then once again, if anybody has not is not aware, Ian has a private stock club that we just ran a sale in conjunction with Earn Your Leisure. That's up, but that's over. The sale's over, but the stock club is still available. So if you're interested, the link is in the description. And then also on our website, we have a link to it. And then he has a link as well. So
yeah, I see a lot of Red Panda families in here, man. Shout out to all the new Red Panda families.
Shout out to the Red Panda.
I appreciate y'all.
Building, sure.
Janet said to meet in Saturday.
Saturday? Okay, yeah.
I think somebody had a question about the Telegram. How do they get into that? You just download Telegram. That's the app, right? Telegram?
Yeah, just download Telegram, and then once you guys are in the membership site, it'll be the first module in there, and you can click the link. And shout out to everybody who was on the meeting today, this morning. I appreciate you.
Yeah, shout out to Red Panda. It's a whole movement. Okay, so now, like I said, with this show, we want to talk about a variety of different things. It's not just like telling you about individual stocks, it's educating you as well. So one of the things that the last caller, actually, a couple callers had just spoke about, that's really big.
Segue perfect.
Yeah, it's earnings. So a lot of times so the whole thing is we want to try to build your vocabulary when it comes to investing, so you can become more familiar with these terms and become more confident. So earnings, you might hear earnings a lot, and it's like earnings week and
earnings season,
earnings seasons and all that. So earnings is pretty much the amount of profit that a company produces during a specific period of time. So this week is for a quarter, right?
It's a big earnings week. So like you said, like it really tells you the indication of how healthy a company is. So we got big earnings week this week, right? I'm gonna run down the list of who's coming. We got Tesla reporting on Wednesday. We got Apple reporting Thursday. Microsoft reporting Wednesday. Amazon Thursday. Boeing Wednesday. AMD, a stock that we've talked about, on Wednesday. Facebook on Wednesday. Twitter on Thursday. McDonald's on Thursday. And a company that I love, Starbucks, is reporting tomorrow. Big time stuff going on.
It's gonna be an interesting week, because this is really gonna tell us how healthy some of the companies are, and then the tech, particular Apple and Facebook, is going to set a tone. Boeing, I'm concerned about because of everything that's happened, but it may give you guys the opportunity to buy back at a lower price than what you wanted if the earnings are not good. But it'll be interesting in the week, and the market is definitely going to move a lot as a result.
You know what? It's funny that you said that, because we talk about Boeing a lot, but it's a hot stock and it's been in the news a lot. And you know, when it dropped today a little bit, and it was kind of flat. And I was thinking about buying some at 124. And then I read a report that the CEO said that the flight industry is not going to be back for 2 to 3 years. Actually, no, for like 2 to 3 years. So that's why it's kind of like been a drag. And then I'm like, okay, I know the earnings are coming out this week. So it's a double-edged sword, because they're obviously going to have negative earnings. We know that. But if the earnings are better than expected, the stock can go up.
You get a little bounce, yeah.
Or if it's like really, really bad, the stock can go down. You know what's crazy? They said that airlines are operating at 5% of what they usually do, like 5%, like as far as like their usual flight patterns and their usual traffic. Like that's crazy. 95% of their business, airlines in general, 95% of the airlines business right now has been wiped out. And they said it's not going to get back for 3 years.
And the thing is, like, for those of you who are watching this in 2025, it's easy to say, oh man, I would have invested in every airline. But when you're drawing down or losing 20% of your portfolio value, it's not something that you're able to stomach. One of the greatest pieces of advice I can give you is, when you want a company, you need to research and look at what price you want to get in when the market is closed. So the chart isn't moving and your emotions aren't attached to it. For my technical traders, if you look on a weekly chart, we did a dead cat bounce. We went from 89 to 185 and we slid back down. So we should drop a little bit more before we go back up. And the earnings may be rough, but if you are looking to get in Boeing, and that's why I tell you guys all the time, you're like, hey, I missed the price. I want to get in at 95. At some point, the price will come back down sub 100 and you'll be able to get in. But if you hold for that 3, 4, 5 year period, when the economy is back to normal, you are going to thank yourself. But while you're going through the storm, it's tough. And the same thing is in real estate. I was watching an interview with Mac 10, and they asked him, like, what did you do?
Mac 10?
On flag?
Yeah.
West Side?
And it was like, what did you do when the houses lost value? And he was like, I just held them. It sounds so simple, but the best thing you guys can do is hold your stocks. And if they're good companies, they're going to go up over time. The truth is, some of you are trying to act like you want to hold them for years, and you're trying to flip them. So they're coming back, and now you're panicking.
It's funny you say that, because somebody in the YouTube comments said, it said I'm negative Boeing. I brought Boeing at 158, I think, and now it's at 125. But like you said, you're already negative. It's going to come back eventually. How long? We don't know.
You invested in the right company on the wrong day.
Wrong time. Yeah.
But
I had a question, and I had a conversation about this actually with Jamal, and he was thinking about the strategy of riding some of these companies up into the earnings. Because I mean, we see Tesla just go on a run. What do you think about that strategy? Just following the company, studying it, knowing that the earnings are coming close, they're going to report. And yes, somebody asked on YouTube, is this his first quarter earnings? Yes, first quarter earnings. So obviously, second quarter, everybody's going to take a beating because most of the country's closed. What do you think about that strategy, riding up into the earnings and then waiting right before and saying, you know what, I'll take my earnings now, and then we'll see what happens when the report comes out?
That's technically trading.
Right?
You can spend it however you want to, but it's trading. Like if you're not looking to hold, because even sometimes you can get out prematurely, and then that's when the FOMO kicks in. It was like, oh man, I should have held it. If you're in a good like people are usually trying to play earnings if they're in something that's not that good of a quality. If Apple tanks off earnings, I won't budge one bit. I already know what prices I want to add to, because I know in 11 months, 12 months, Apple will be okay. And that's why I tell everyone here, go to that 5-year first and let that be your guide. If it's been sliding down before the crash, it's going to continue to slide. That's why I say Ford is no good, GE is no good, MCIG, it's the same ones over and over. The ones that have been well, the cream is rising to the top. So the earnings play, if you're looking to hold it 5 years, it shouldn't factor in as much anyway.
Justin Johnson, shout out to you on YouTube. Breaking news alert. We have 1,000, y'all.
1,000. 2 weeks in a row.
Back to back on that.
Actually,
so much.
Instagram, we did okay, 1K, 1K.
On fire this time.
We're on fire with this Market Monday situation. But I want to say something. But the earnings is interesting. It should be interesting this year because it's the first quarter earnings. So January was a crazy month, like on the upside.
Yeah.
And then February, it was still good. It started to travel at the end. And then we all know what happened in March. So it'll be interesting to see, like, some of these companies might be flat for the first quarter. Some of them might even have a profit. It'll be interesting to see how bad those losses actually look.
Yeah. In the second quarter.
Because it's not like the whole first quarter was like this. It actually started off really good and then came down like at the end. So
I mean, the first company we talked about, GM, was up 40% from where they're at now in January. A company that I want to talk to you about later on, Live Nation, was on pace to have their biggest year ever. And obviously, live event space got shut down.
So somebody had asked a question I want to answer. They said that they EYLU. So all you got to do is go to the link, EYL University, and then just go to the annual. When you go to subscribe, go to annual and enter that code, EYL149. And then once again, we have the Red Panda link in our description, and it's on our website as well for Ian Stock Club. But that's how you access the EYL University. You just go to the link and then go to the annual. So we have a question.
My man Daniel, what's up, man?
What's going on?
We're missing you, bro.
Good, fellas. What's going on?
How you doing?
You on Market Mondays, bro. But shout out to you.
Thanks. So March has been interesting. I mean, April's been interesting, right? A lot of the stocks I was kind of being a knucklehead on. I just jumped in, and I jumped in too high. Okay. So what's Ian's strategy, or you got strategy on, like, how do I go back and come back and lower?
What companies are you looking at? And I'll answer your question. So if you got in too high, when the market is not moving, that's the best time for you to pull up a chart and look at where you want to get in, because now you don't have any bias. It's not moving up, so you're not having any FOMO. It's not moving down, so you're not worried. I want you to plan out when the market isn't moving, where you want to get in. But if you tell me a couple companies where you got in, I'll tell you if you got in too high or not, and if you should hold them.
Dan, you there?
I got in at Microsoft. Yeah, I'm here. Can you hear me?
Yeah, we hear you now. We at Microsoft. Where'd you get in at Microsoft?
I got in at 169.
It's not that bad. They're 174.05 right now. Earnings should be okay, but I will hold it, and then I will look to buy again maybe around 130, 135. And then you can bring your average cost down. So if you take 174 and then let's say you buy 130, add those two numbers together, divide it by 2, and then it'll give you a new average price on what you're getting in. For all my technical traders, Microsoft is above the 100 moving average on the weekly chart. So it's a really good sign.
All right, one more question. So you said, I know you keep saying that keep buying. So when you say keep buying, you mean buy it when it goes back down, or just keep buying regardless of what? I know you're advocate for Apple, you're advocate for Microsoft, these big companies. Keep buying as in just keep buying?
Yeah, you want to buy good prices, so you want to wait. So on the days in which if you don't know how to read a chart, you need to know. But if you don't know, when the market is having its worst days, buy then, and then you can average down and you'll be okay. But look around that 130, 135 area. And if you can get lucky enough to get it at 118, fire away. But you don't want to buy it at a high. You want to stay away from there, like, because the next high we'll go to, if the company is good, is like 190. You want to buy in a 130s, 135 area so you can get more. But if you don't know how to read a chart, you have to learn how to do so you can pick where you want to get in on your own and not have to guess.
Right. Okay.
Appreciate you, Daniel.
Yeah, and check that. Yeah, and I know Ian's a big fan of that dollar cost averaging. Is what it's called. Is where you're buying on a consistent basis, and that way you're buying some high, you're buying some low. But it's like you pick a good company like Apple or Microsoft,
yeah,
Google. It's like those companies are going to go up over the course of time, as opposed to trying to time the market, because that's really like guessing at that point. It's like you can get lucky, but it's kind of difficult to time the market. So dollar cost averaging. And then once again, most people, the way that they dollar cost average in their day-to-day life is their 401k. That's a form of dollar cost averaging, where you're putting money into an investment every single time you get paid. Think about investing the same way. It's no different. You know, if you, over the course of time, it's been proven that you actually perform better if you invest over like every month.
The consistency of it is what matters. And then because most people don't have 100,000 or 500 grand to put down when a crash happens. Now for the athletes, rappers, ball players has been hitting me. If you can do it, great. But the average person isn't able to put down $200,000 for Apple and then another $300,000 in the Tesla. So that's why you guys need to buy every single month. And then you'll get into the habit of knowing when to buy. But once again, the number of shares that you have matters most. Just don't buy. When it hits an all-time high, please don't buy it. Please don't buy it.
Not the time.
Not the time.
Morgan, we are coming to you. Morgan, you are unmuted. Unmute yourself.
What's going on, fellas? Y'all can hear me?
What's going on, bro?
What's up, bro?
Not much. I just want to say, appreciate you this morning, Ian. You was rapid fire, and I was trying to keep up, but
that was at 9:30 call, right?
Yes, sir.
Yeah, it was game time. So I'm sorry I couldn't go by slower, but you know when it's finals time, you got to speed it up a little bit and hit it with it out. But I got you. I'll break it down and make it slower for you next time.
So I guess what I'm trying to figure out is I'm trying to learn this tool that I'm using, the platform, and I'm trying to set all of the prices for the ones that you said, so it can be automatic, because it's hard for me to, like, at work try to figure out when I can get in and get out or whatever.
Yeah.
Do you know any tools that or any things that I could watch to help me so I can make sure I'm doing that correctly, I guess, is the biggest.
You in the stock club?
Yeah, I'm in there.
Oh, man, just send me a message. I'll tell you how to place a limit order so you can put it there, set it, and forget it. And then once it go to that price, it'll get you in.
Okay, and the other question is, I'm trying to get to where I'm doing it every month. So if I'm understanding you properly, I can just fund my account every month and then get in when I'm deciding to get in, but just keep funding the account every month, like automatic.
Yeah, and even better, you can send me a note and I'll probably reply to it tomorrow. But a great tip for everyone, it's better if you automate your investing so you don't even have to think about it. But if you can fund it every single month, if you want to do it manually, be one way to make it, to speed it up so it's getting done no matter what. It's the only thing that I prefer that you have on auto pay, and that's your investing. All bills, I don't want you to have on auto pay, but your long-term investments will be a great way for you to do it so you don't have to think about it.
Okay, I send you a message.
Thank you, brother. I appreciate you.
Morgan. He said auto pay your investments, not your bills.
That's the only thing.
That's the only thing.
The only way.
Shout out to you. Janet, we're coming to you. What's up, Janet?
Hey guys, how you doing?
Oh, we're doing great.
Yes.
Shout out to my EWL University members.
Yeah. Janet,
I drank the Kool-Aid. I joined everything last week. So
Shout out,
Janet, you was on
to,
fire yesterday.
Shout out to EYL University. And shout out to the private real estate group. That is, you guys had the Zoom call.
Yeah. We had a movie review yesterday. Janet brought her notes and all her game to it. So shout out to you, Janet. And you're not sharing your screen tonight, but it's all good.
So my question is about evaluating companies. So Ian, I know that you look at stock prices over the last 5 years. But like, what else should we be thinking about when we think about like companies? Should we be looking at their financial statements or 10Ks? Do you recommend we do that? And how do you go about it?
If you want to take a more robust approach, yes, all of that. So financials, management, 10K is great. I've just simplified it to where I have a process for how I look at a company and I can evaluate it in less than 1 minute and know if it's good or bad before I get to the 10K or the financials. But if you want to dig in deep,
How do you do that in 1 minute? Like what are you looking at?
I'm literally just looking at the 5-year month. So if you give me if you give me a stock right now, I can look at it and then I'll be able to tell you based on the number of candles. And it's a quick tip too. So for all my more technical investors, you can look at a quarterly chart based on 5-year and they give you less candles or less of a line graph and you can see clear if it's going up or down. But maybe sometime in May, I can do maybe like a 1 or 2 minute video and then we can maybe play it here or something like that to kind of guide you through.
Yeah, that'd be good.
Yeah, but if you look at go to Yahoo Finance, look at the 5-year month, and if it's sloping down, and look at it before Corona hit, because a lot of these companies were falling down beforehand. Corona just accelerated it. But that 5-year month is my guy, and everybody in Red Panda will tell you, I swear, but it's the first thing I look at. Every company, every future, every instrument that I look at the 5-year month first.
Now, where do you find that chart, the 5-year chart?
Anywhere.
Anywhere?
Yeah, anywhere. You go to Yahoo Finance, it's a common time frame. It's the same thing as if you're married. After you've been married for 5 years or you've had a child for 5 years, you know everything you need to know, good or bad.
If you have an iPhone, you have the stock app on your iPhone, you could just look at it there. Shout out to Peter Mortgage Guy and Michael McDonald for the super chats.
Big homie. Yo, Ian, that's crazy. I actually, when you said look at the 5-year chart and let's see if these stocks have been holding up over that time, I looked at a couple of my hotel ones and I was like, damn, this thing has been going down before Corona. This is a telltale sign. This is not something I need to be in. Jen, we appreciate that. Thank you.
Thank you, guys.
Thank you. And once again, the people that's asking Zoom questions are members of EYL University. We're running a sale to the end of this month on Thursday.
End of this week.
Yeah, the end of this week. May 1st, the price is changing, but it's $149 discounted for the entire year, which is like $12 a month. And that's code EYL149, EYLUniversity.com. And yes, you can type it in there. Shout out to John Sally. You know what's interesting for the super chat? You know what's interesting, Ian, is that have you been watching that Michael Jordan documentary thing?
Yeah, I love it. It's been incredible.
So I seen John Sally. They interviewed him from the Pistons. Yeah. And he's a big supporter of Earn Your Leisure. He follows my page. Shout out Sal. So it's funny because somebody just super chat. Their name is John Sally. I don't know if that's the John Sally or not, but John Sally's a big fan. I'm sure he's probably seen you because he looks at all the posts. So, yeah.
John Sally was a superstar investor too. Very humble. Yeah. But on the business side and investment side, he's a smart guy.
And a champion too, man. Yeah. He got 50 rings. He was on the Bulls when they won. He was on the Lakers when they won.
Michael Jordan's still mad about that whole Isaiah Thomas.
Come on, man. Some things we don't forget. Some things you don't forget.
He's still mad about it.
Michael Hartley, what's up, man? EYL is coming to you. Unmute yourself, bro.
Hello?
What's up, Mike?
What's going on, brother?
How y'all doing?
We great, man.
Good.
I had a question for Ann. I already invested into an index fund, but I just want to get your opinion on it. The ticker is SWPPX.
Yeah.
Just wanted to get your advice on that.
How long you been investing into it?
I mean, not that long, probably like 3 weeks.
And you got in at what, like 38?
I got it in, I think 36.
Oh, you golden. Hold that, baby. Well, once it goes to 47.5, you'll be good. It's back above the 100 period moving average. You're good. If earnings are good, it'll shoot up faster. But give it about 3 months, and when the economy opens back up, it should go back to around 50, and you'll be golden. Hold it. You'll be good.
Yeah, I'm kind of doing like the dollar cost averaging thing with that. So I mean, when I do put money back into it, what's a good price to hit it at again?
I'll have to. You have to join the stock club for me to tell you. But if you get it back around 42.50, that's a decent area. Or let's say 40 is a decent area.
Okay, I'm already in stock club, and I'm
send me a message on Telegram.
Telegram.
Huh? Yeah, send me a message on Telegram. I'll tell you exactly what to get in.
Okay, and one more question. I keep missing the videos when you're talking about UVXY. What's a good time? What's a good price to get in and on that and get out?
Not right now because the market is angling. And I know a lot of you guys have been asking about the inverted indexes. Now is not the best time to do so because if earnings are good, they're going to slam down really fast. The peak time to get in them was last month. But for those of you who are looking at it, UVXY went to 140. It's at 43.1 right now, and it should drop to 31.86 in the next 2 or 3 weeks. Not right now. No, not right. Don't touch it right now, please. I'm begging you.
Okay. Well, I appreciate you, fellas. Have a good one.
Mike.
I appreciate you as well.
Yeah, we got the whole, everybody's in the stock club, Ian.
Everybody's
in the stock club, man. You know.
That's crazy. I'm trying to,
yeah, they throwing pandas up on YouTube, man. It's going crazy over there. Yeah, shout out to Ann. He said, "What's up with Tyson Foods?" Tyson Foods put out a report yesterday that some of their plants, some of their workers at their plants actually tested positive for corona, so there might be a shortage in the food supply. So that's what that's about. I see that question up there.
Shout out to Ginger Hales Lemonade for the super chat. Appreciate it.
I think I've tasted that before. Shout out to Ginger Hales.
Shout out to Ginger Hales super chat.
Maurice, what's up, bro? We coming to you right now. Oh, somebody raised their hand twice. All right, Maurice, go ahead, bro.
Hey, what's going on? I'm a part of the Red Panda Club, but I don't know how to do the Telegram.
You have my email?
Yeah, I believe so.
Yeah, send me an email and I'll send you a link directly tonight when we get off here.
Okay, and one more question. If I'm putting like some money aside like every month, I remember I think somebody else has just asked it, but I didn't hear the answer. And I'm trying to pretty much time it on where it's supposed to come in the market at, or like how does that work?
Well, let me just say something. Are you from California by any chance?
Yep.
LA?
No, I'm from the Bay Area.
Bay Area, right? I was like, nah, it's Bay Area.
Yeah, I knew it was something. Yeah, shout out to Cali, man. You
already know.
You got a heavy accent. But yeah, I think, and correct me if I'm wrong, Ian, but I think the whole point of dollar cost averaging is that you're not really trying to time it. Like it's like, that's why your dollar cost averaging is like you pick a day, the 15th of every month, and you just put money in on the 15th of every month. It's like Apple or Google, stuff like that. It's like kind of defeats the purpose if you're trying to time it every single month. It's almost impossible. And right?
Yeah, and I will say this, so for like the retirement picks are the ones that you're going to build like a cornerstone around for your retirement, dollar cost average and by demand, more volatile stocks like Tesla, Virgin Galactic. You need exact prices of where to get in, because you can get in at the top of Tesla at 800 or 750 and it'll slam back to 540 on you and you'll cry. So retirement, legacy companies you want to dollar cost average into. The more volatile ones, you want to pick a specific price and you'll be golden. So I hope that helps.
Okay.
Apple, Google, any index funds, you're good. The volatile ones, you need to pick an exact price and put more in at that exact spot.
Okay.
All right, Maurice, appreciate you.
Shout out to the Bay Area.
Stay safe out there, man.
Shout out to the Bay, man. Shout out to Jamal on the check-in on the super chat, love. Appreciate it. Shout out to AOG. Appreciate it. He said that's the best way. Oh, we didn't talk about this. What's your thoughts on margins account?
Yeah, a couple of people asked that on YouTube.
Man, you got to have a good skill set, good timing, and good discipline, because if you go margin, you can mess up your money really fast. For those of us that day trade, a lot of us are doing so on margin as well. You have to, so if you're trading on margin, you have to map out the number of investments or trades you're going to make in advance so you don't make too many. But I prefer long-term investment that you don't do it, especially if you have less than, let's say, 20 grand, 25 grand, don't do it. And I know a lot of you feel like, hey, man, you forgot where you came from. And I started small. And I earned my way up to trade more. And I earned it. Invest more. Because if you go margin with 10 grand, you can go to YouTube and just type in Robinhood margin call. And there's a bunch of videos of people being negative, several $1,000s up to like 100 grand trading on margin. Be very careful. Be very careful.
Yeah. Be careful on the margin. That's not something to play around with.
Strictly for value.
An immense skill set to do so. Be careful.
Great discipline, great timing. Darian, what's going on? You're unmuted. The floor is yours. Go ahead, bro.
Hey, how you doing? It's Darian, but I just want to thank first and foremost everything you guys do. I just wanted to ask Ian about Raytheon Technologies.
Let me check it out. Thank you, brother.
RTX.
RPX.
RT is in Thomas. Watch out.
Oh, shout out to MT the Mortgage guy. $49.99.
Chat wars have begun.
$49.99 super chat.
That's crazy.
Shout out to Matt, man.
Raytheon is decent. It's just at a low price. It's at an interesting area because it's right on that 100-day moving average. Earnings will be coming out soon. They may take a little bit of a hit, but if you hold it in long term, you'll be good. And then once it gets back to what prices is 81.32, you'll be good. So if you're in it already, hold it.
Okay. Thank you.
Appreciate it. Before we go on the questions, because we're getting a lot of questions. I wanted to do something before we end this, because people have asked. We do read YouTube comments, so continue to comment on YouTube and add suggestions. So one of the suggestions that they had on YouTube was that they said, will it be covering different investments outside of stocks? Like, will you ever talk in depth about a mutual fund or index fund or ETF? So I thought that would, I just thought about like last minute that maybe like for the next couple of weeks, we can talk about like one. So I'm going to talk about a mutual fund. I'm going to talk about a mutual fund today. And then maybe next week we can talk about an index and an ETF. So the mutual fund I'm going to talk about is the same one that I talked about on the podcast. And I'm gonna kind of just explain like how a mutual fund works and different like pros and cons. So Franklin Templeton is a mutual fund company. So first and foremost, a mutual fund is like a collective of stocks where you have like 149 different stocks in one basket, right, of a mutual fund. So the whole point of a mutual fund is that it's managed, whereas like you're not actually doing it yourself. So now a lot of people say like, is it better to index a mutual? That's not really the point of this discussion, just to educate you and you kind of just do the research yourself. But so the mutual fund, shout out to Jordan on the super chat. Appreciate it.
What up, Jordan?
So this particular mutual fund is called the Franklin Diamond Tech Fund. And the reason why I like this fund is it's a technology fund. Yeah. So it's averaged like 13% for the last 10 years. So how mutual funds work, the major con against mutual funds, shout out to Mark on the super chat, shout out to Vince on the super chat.
Wow.
Super chat's coming in.
Super chat has begun.
Is that you pay for it, right? So it's what's called a sales charge. So a mutual fund, so this particular mutual fund, 50,000 and less is a 5.5% sales charge. So that means if you invest $20,000, you're paying 5.5% upfront, right? And then from 50,000 to 100 is 4.5, and then from 100 to 250 is 3.5. From 250 to 499 is 2.5. So the more money you put in, the lower the sales charge, right? So that's like the number one knock against mutual funds, is that it has a sales charge. Now, me personally, I think it depends, because it's like if you have a really good mutual fund, then the sales charge might not be the determining factor.
Say the name of the fund again.
The Franklin Diamond Tech Fund.
Okay.
So it all depends, right? But the bottom line is that it's billions of dollars are invested in mutual funds. So I think it's important just to at the very least educate people on like what they are and how they work. Yeah. So like this particular fund, it has some of the companies that are in Amazon, Microsoft, MasterCard, Google, ServiceNow, Visa, Shopify, Facebook, a lot of household names, Adobe, Salesforce. But also, it's not just tech. So it's like 40% tech, but it also has real estate, healthcare, financial services. So it's a variety of different things, right? So when you're looking at a mutual fund, just like how you're looking at stock, I like what Ian says a lot when he talks about the rate of return for 5 years. That's how I look at any type of investment. It's like, what has it done for 5 years, 10 years? And so, but like this particular fund, right? For the 5 years, averaged 11% a year for 5 years. It's averaged 13% a year for 10 years. And since its inception, it's averaged 9.2%. So it has a good long-term track record, right? So once again, and then Morningstar. Morningstar is a rating agency that rates mutual funds. So if you're ever looking at mutual funds, if you're looking at investment, Morningstar, and you can Google Morningstar, and they have, it's kind of like how cars are rated. I forget the rating agency that rates cars, but like they rate it against their peer group. So like Morningstar, like it rates mutual funds. So you can see like this particular fund has a 5-star Morningstar rating. So that means that it has the best. So if a fund has a 2-star Morningstar rating, obviously it's underperforming.
Like, right? We're talking about supermarket, it was a Michelin.
Yeah, okay. Exactly. So yeah, it really just depends. There's different share classes, like there's A class, B class. But for most retail investors, they're going to invest in A class shares.
A class is killer.
Yeah, A class shares. So that's where the price comes out at first as far as the sales charge. So I say that to say, oh, we got a $99 super chat.
Yeah.
Cool, from who?
That was Mark. You said shout out to Mark, but Mark had a question too.
Mark,
I was gonna let you finish.
Mark, shout out to $99 super chat.
You put $99.99.
$99.99. Then Vince followed up with $19.99. Super chat is super lit tonight.
Yeah, it's lit again.
Oh man, we're back at it. So yeah, so that's something that, like I said, I mean, we do watch and read these YouTube comments, and we want to try to give you as much help as possible. So I know a lot of people are anti-mutual funds, but like I said, we're really not here to like say what to do, just try to provide information.
You know the words,
and
man.
then, like I said, we'll talk about an ETF one week, we'll talk about an index fund one week, just to kind of give you a general idea. Now, this isn't to say this is the best mutual fund, it's the only mutual fund. There's thousands of mutual funds out there, but this is just one particular mutual fund from a mutual fund company. But
yeah, and I will say, looking at it, if you guys look at the ticker, it is FKD and X. When it dropped, when Corona and the crash happened, they didn't get beat up. For my technical traders, it did not go to the 100-day moving average or EMA, and it rebounded nicely from 71.86. It's currently at 91.24, quickly approaching 95.37. Like, that's why I keep telling you guys, if you invest in tech, it's going to recover a lot faster. Most companies are being drugged down. If you guys look at that 5-year, that tech fund is back to the upside. So
exactly. A lot of these tech companies a lot of tech companies haven't lost any money. Amazon, like a lot of these guys, like all time high. Like a lot of these tech companies, you would never knew anything even happened.
Yeah.
Marion, it is you. You are unmuted, and the floor is yours. Go ahead. You unmuted yourself already.
Wow. First and foremost, I just wanted to say thank you guys so much for all the content you guys put out. I just joined EYL just last week. I've been following you guys for a very, very long time, and I'm finishing up a semester in business school, but I've been learning way more here than I have there.
How do you feel about your EYL university experience so far?
Oh man, it's been crazy. I mean, I've been listening to your podcast like for a very, very long time. So I would say it's just been crazy being a part of this
community.
Yeah, definitely. I mean, I was a part of the Sunday kind of the movie thing, and I thought that was really cool. Getting everybody's insight on that was really, really dope. Yeah, for sure.
Appreciate you. That's why we call it a university. This is what it's all about.
It's bigger than that.
Yeah, thank you.
So, Ian, my question for you, I mean, I've definitely been following your IG lives, and I know how you feel about oil, and I heard you say not to buy USO, but what is your thoughts overall on oil? Like, do you think it's something that we should invest in? I was looking at different trusts or funds like IEO, IXC, or do you think it's something that we should just not go near at all?
Give me a couple of tickers and I'll go through them one by one and let you know if they're good.
All right, so I looked up IEO.
How long are you looking to hold it?
I'm a long-term investor, so definitely like within 5-10 years, because I know that a lot of people have been also saying that, people are gonna maybe like buy more cars, people will be driving more often because they won't want to obviously be in public spaces and stuff like that.
Okay, go ahead. So IEO is the first one.
Mm-hmm. And then IXC.
Let's see. I like IEO a lot better if you're going to do one. And then probably if it ever gets back up to $42, I will look at closing out of it. For my technical investors, is underneath that 100 and 200 EMA. Not a good sign, but if you're young because you're in B school, I will hold it to the 40s, and then I will probably look to take profit. The world that we're living in is much different than the world I grew up in when I was in college. Oil is not going to be the powerhouse forever that we once thought it was. And I would wish I can give a happier insight on oil, but the price is what the price is. But if you hold it for 3 to 4 years, you'll definitely get a bounce to the upside.
Okay. Do you think that we should invest or look into buying like different car stocks? Do you think that people are going to be looking to maybe purchase more cars versus riding the T?
Good question.
The only car company I can recommend without you wanting to kill me in 3 years is Tesla.
No. Okay. All right. Thank you guys so much.
Thank you. Shout out to D Daniels for the super chat. Shout out to Mark. He just did another $99 super chat. He said this is just for fun. He's just having fun with it. It's just like he's just.
Hey, I'll see you. Send me a super chat.
That was a great point that Marion just said. I actually was watching that reading it on Bloomberg. They were saying that some of the car industry companies might come back because of social distancing. Less people want to ride public transportation. I started thinking about that. It makes a lot of sense, especially when we live here in New York. If you've ever been on a subway, there is no way to social distance. It's like one of my days. I don't feel much in life. I hate riding the subway in New York City.
Another.
I will say this. For the car company space, I'm going to cut you off. Carvana, I do like.
Carvana?
Carvana, I like. More of a tech play, but Carvana, I like a lot.
Mark, you've earned alumni status. You've been knighted. You've been knighted.
Mark, here's what I want you to do. I want you to email me, Troy at Earn Your Leisure, and we're gonna take care of you, Mark. Mark is going off.
Mark, you have been knighted. You've been knighted.
Top earner of the night. That's for sure.
Super chat.
Maurice, you had another question, bro? I see your hand still up.
Oh, no, sir.
All right.
Yeah, and for my Red Panda family, for those of you that are in the stock club, you can email me at ian@joinredpanda.com and I'll be happy to help you.
Yeah, I know a lot of people join that. So yeah, if you have, I was actually just about to say that. So Ian at redpanda.com.
No, at joinredpanda.com.
So Ian at, all right. So guys, Ian at joinredpanda.com. Do not DM me. Do not DM us. Sure.
Nah, it's ridiculous.
Listen, it's a lot of y'all. We got a nice tribe. Like, we got a nice army. So be patient with me. But I'm gonna tell you guys the exact prices. If you don't touch those prices, don't buy. But I got you. Thank you to everybody who was on the call. I think we maxed out at, I don't know, it was ridiculous. I think it's like 300-400 people on the call this morning.
Nah,
they woke up. They was ready.
You got the tsunami of new members. You're gonna have to get staff, like a whole staffing onboarding, a staff onboarding. Get onboarding.
Be patient.
Yeah,
I'll email you guys the prices as well to get in today. If for those of you not in the Telegram group, I'll send an email out to everyone in the program as well.
Once again, we appreciate you doing that sale for Earn Your Leisure for the community. And I know a lot of people. So yeah, just everybody, just be patient. You'll get all your information, I'm sure. Just follow the protocol.
Please don't DM us.
Follow the protocol.
Please, don't DM our families, please.
Nah, but it's been a massive success. I've only heard positive things. I'll be honest with you, Ian. I've only heard positive things about Red Panda and I'm not just saying that. I'm actually like serious about it. Everybody, Mark going off.
Yo, Mark going way off.
Mark.
Hey, yo, Mike, we gotta give Mark's address.
So Mark's actually a VC investor. Mark, we gotta talk. Then we actually gotta talk. This is why he's just throwing around money.
That's a great conversation to have. Yeah.
See, it's all about community. You never know who's watching. You never know who's watching.
That's a
then
fact.
From the sports guys to the business guys, and that's the great thing about Earn Your Leisure is that we built the community, and like from our guests to us, and it's like everybody gets exposure, and you never know. And that's a good lesson to just people in business in general. Is like treat everybody the same.
You have to.
Manners, be a diplomat, because you don't know who you're talking to, and it's just good karma. I'm a big believer in karma.
Yeah.
And stuff like that. Just it always comes back around to if you do the right thing.
Yeah. I told you, man. The world's watching at all times. No matter if you think somebody's looking at you, the world's always watching. We got a question.
Shout out to Inro 23136 on the super chat. Appreciate it.
Kim, Jake, what's going on, Kim?
Hey, I don't want to use this platform for this, but I just want to say it because there are so many people on here.
Yeah.
Okay, I found out today that all local CVSs in South Jersey are giving away free greeting cards with the envelopes. I picked up 4, no questions asked, at 2 different locations. The total was 4. For you to gift to any healthcare worker. You can mail it, you can, hand it to someone. I want to stress the importance of being kind to other people right now, and understanding that everybody is going through things, different levels of things. Their stuff may not be financial. If we're blessed enough to not have that worry, great, but just be kind to other people. I just wanted to say that.
Thank you, Kim.
We appreciate that message, and that's extremely important, and it's extremely timely. But there's a lot of people that are struggling financially, physically, and we have to support our healthcare workers. Actually,
mentally and emotionally too.
Yeah, I just thought about something. I'm just going to throw it out. I'm sure Troy's going to agree with me, but Earn Your Leisure, we're going to come up with some kind of initiative.
Yeah, we're working on something.
We're going to do an initiative to give back, and anybody that wants to contribute or help, and we'll figure out what the best way to kind of go about that, to whether it get back to healthcare workers or a couple families in need. But I think it's important for people that are doing halfway decent during this time to not only count your blessings, but to actually help other people as well. So
giving back is the number one gift you can do.
Yes.
And shout out to Kim, man. She was part of our private real estate group and shared some powerful stories yesterday with us. So shout out to Kim.
Yes. And shout out to Pascal, Jean, Pierre.
All right, Ain, I think it's Ain. I want to get that right. Ain, I'm coming to you. The floor is yours. Unmute yourself. You've been unmuted, bro.
How you doing?
I'm good, man. How you?
All right. It's actually Ian. I just spelled my name differently.
All right, I'm botching names all night. It's all good. All love, man. We family here.
All right, perfect. Hey, I'm calling from South Florida, Fort Lauderdale, Miami area. But Ian, yeah. But Ian, my brother, I respect everything you're doing. And I love that name, by the way.
Thank you. I love yours too, man.
Yeah, for sure. But it's just simple questions I have. Because I'm new. Well, I've been dabbling in the stock game, but I'm very, very appreciative of what you're doing as far as like helping the common man, woman, as far as getting in and helping out with, any tips. But do you just deal with long-term stocks or do you deal with day trading as well? I didn't catch that.
I short-term invest as well. So if you have any technical trading questions, we can dive into it. I'll be happy to.
So, thank you. I just joined your Panda Club, so I just want to say good. I saw all the videos. You're doing very good right there. I like the information I got, but I will hit you up. I guess through the private group, the Telegram, just for certain questions. But another question I had, as far as, because I do have a young boy myself, and you touched on stocks as far as earlier, but I didn't catch it as far as like legacy stocks and stuff like that. He's 3 years old. I was just kind of want to get your opinion as far as what would kind of be the best way, because I've already had money saved up for him, but I want to make sure I optimize that money that I'm actually putting away from.
Yeah, before we get to the day trading part, I want to stress to you as a short-term investor as well, the biggest amount of money that you're going to make is going long-term. There's not a person on earth that would disagree with me when it comes to that on the retail side. So start there. Legacy, Microsoft, Apple, Disney will be a good one. The great thing about your child's portfolio is probably going to outperform yours because your kid doesn't need any money right now. So if you are able to hold those for 10, 15 years, your son will be rich. Like Xander has more money than me right now than I did when I was 29 or 30. Just because I've been saving money for him and putting it into the market. Now, the only time I adjusted his portfolio was in March when I took some out and then I reinvested back in. But follow your plan and then send me a message. I'll give you the exact blueprint that I used for Xander when I knew he was coming into this world. Like, you'll be able to save a lot of money. Like, by the time your kid turns 18, low end, he should have like 100 grand.
Yeah, Ian Jr. going to have that by 18. I hope he'll be definitely straight. But yeah, definitely. But definitely, bro. I do appreciate everything you guys are doing, especially for the people. But that's all I really have, though. But I definitely will hit you up privately.
Thank you, man. I appreciate you so much. And
appreciate you, man. A man that don't take care of his family can't be rich, y'all. Don't forget that.
Shout out to Dante Davis on the super chat. We got one more question. One more question. Let's do one more question.
I think Sabrina, I don't know if she's going to answer. Sabrina, what's going on?
All right.
Hey, can you hear me?
Yes, oh, here you go. What's going on, Sabrina?
First of all, I'm going to say Europe because I'm from the Bronx. What's good?
Hey. Yeah. Oh, we spoke yesterday.
Yeah, I was on, I drank the Kool-Aid too. I'm on the Facebook group. I'm on EYL.
Yeah. Shout out to the BX. Shout out to Gun Hill. Shout out to White Plains Road, 233rd, all that.
Uptown.
Sir, you already know what it is.
You already know what it is.
Either one and all that. Diet Ave, Boston Road. What up?
What I'm saying. So I'm in the stock club too. What's up, Ian?
How you doing?
Told you we got everybody in the stock club, man. Stock club is lit, Ian.
EYL Ian. That's his name.
EYL Ian.
EYL Ian. I'm rocking with it.
Like I'm not going front. I actually got in the stock club first, and then you guys did the Market Monday, and then I got wind of you guys, so now I'm a part of everything. You know what I'm saying? So I appreciate what all you guys are doing. But Ian, real quick. So I'm in a Telegram group, but I know you probably got so many people that come through. I tried to hit you up like maybe like 4 or 5 times over like the past week and a half. So I don't know maybe if my message is not coming through. Is it better to reach out through email
Yeah, email is better. And then if you need immediate response, just fire it off to me right now and I'll look at it as soon as we get off. But literally, it's like if I showed you my Telegram, I would be scrolling for a minute. So I'm working towards getting, but in the Telegram group, you'll see I'll put the prices, where to get in for the particular stocks. But yeah, if you need something, send me a message and then I'll reach out to you because I don't want no smoke when I come to the Bronx.
Now you with us. You with us. You good.
Nah, yeah, because I know that it's 4 of them that you didn't put the price and then you gave us like 2 new joints. So I'm just like, all right, I guess we're supposed to look into those too.
I'm trying to over deliver and give you some free ones. Even Carvana, I dropped a gem on you tonight that it'll be a nice one to add. But the ones that you need, just send me an email and just put Sabrina from the Bronx, and then I'll be sure to reply to that super quick.
All right, Sabrina.
Mark, God bless you. You're a legend.
A legend.
Mark's a legend.
Repeat,
Mark,
a legend.
Mark, you are a legend.
Mark, please email us. Troy at Troy at Earn Your Leisure. Rashad at Earn Your Leisure. We gotta send you something, bro.
Mark deserves a follow back. I'm following Mark.
Shout out to the whole state of Washington.
I am Mark Monroe. Shout out to Seattle, Washington. We gotta go to Seattle as soon as this thing is over. Shout out to Greg Weeks. He has a question. Have y'all Ian heard of Elon Musk just made so long the race of space technology? It's interesting you asked that question because I actually read Elon Musk's book. And he talks in the book. They talk about Mars a lot. Elon Musk really thinks that colonization on Mars is going to take place, and that's one of the reasons for SpaceX. Yeah. And he truly believes that not even just like colonize. He really wants to colonize Mars. So if I was to put a bet on anybody in the outer space race, my personal opinion would be Elon Musk, but I would never bet against Jeff Bezos either.
Don't.
You never know what that guy got up his sleeve.
He got too much capital.
You never know what he got up his sleeve.
Yeah, we got a question from shout out to Andre K from YouTube. He said, what are your views or strategies on gold and what a possible uptick in inflation, given all this money flowing around, can affect an investment?
Look at gold right now. Gold has been pushing to the upside for the last, if you guys look at the chart, really since January of 2019. So for all my gold bugs that love gold, it is towards the highs right now. It's going to pull back a little bit, but it's definitely a good way to hedge. I don't want you to have more than probably 25% of your account in it, but yeah, gold is a good asset to have. So
shout out. Silver as well? Somebody just asked it on YouTube. I remember we went to go see Robert Kiyosaki maybe 15 years ago, and he was big on silver. What's your thoughts on silver?
Both are good. I like gold better, but if you're going to do them, you can split 7.5 and 7.5. But I think gold is a better way to hedge that than bonds.
Shout out to Dodd. Seattle's in here heavy on a super chat. Yeah. Shout out to Arcas 1057 on a super chat also.
Yo, Ian, I don't know if you saw last Thursday. We had a super chat battle. It went crazy. Tonight, that record was broken. I just want everybody to know the record was broken. Our super chat went crazy again today. So shout out to everybody on YouTube, all 1,000+ of y'all. Shout out to over the 100 people, Earn Your Leisure University members that are in here tonight. This is been a record tonight again, man. Every time we come on, we break another record, bro.
It's like Usain Bolt. Like after one race, you got to break another record.
You got to break another one. Yeah, I'm just trying to help it. And like I said, even for those of you who don't know me, even if you don't like my perspective or approach, like I'm just sharing what I wish I knew during the last recession. And honestly, like when I was doing a IG live and like one of my classmates from high school was on, and it was like, I went back and did the calculation. I talked to my dad, what my dad paid in tuition. We would have had like $1.8 million if we would invested in some of these tech companies. It was not talked about where I'm from. So I know some of you see the suit and tie now, but it wasn't always like that. So, I'm just here to help. So even if you guys never sign up for the stock club, ask questions. I'm happy to help you and keep you on the right path and out of stocks that will drain your account.
Yeah, shout out to Rick. And once again, Rick, you might be late. We appreciate it. We're gonna do an episode on options, and we'll probably talk about options, but we don't want to. It's kind of like really involved thing, and people have been asking about options a lot. I don't want to like do like 5-minute, 2-minute conversation on options.
You can't. But even for any short-term trading, so I'll give you a couple of gems. One, you have to practice your ass off. So take at least 100 practice trades in sim or demo before you go live. 2, you need to practice the same contract size or number of shares that you're going to trade. 3, you need a predetermined target on each trade, because if you run 150%, if it slides back to 70, you're not going to want to close it out. So emotional discipline is the most important thing that you need for trading. And everyone who was in the room this morning, you heard me talking through that. Hey, we're going to drop here. We're going to go here. Because when you're seeing $3,000 and $4,000 go in front of you, or 10,000, emotions kick in and you don't do what you're supposed to do. So before we have a deeper conversation on trading and options and futures, like, nail those home. If you can nail your discipline, you're good. And in this market, if any of you guys can nail 2 to 8% in a month, you can be a king, because people are throwing money at you right now because most funds are losing.
Yeah, somebody asked about the earnings again. I'm gonna repeat the earnings that are coming this week. So this week we got Tesla on Wednesday, Microsoft Wednesday, Boeing Wednesday, AMD Wednesday, Facebook on Wednesday, and then on Thursday we got Apple, Amazon, Twitter, McDonald's, and tomorrow Starbucks. So those are the earnings that are going to be reported this week. It's a big week, y'all. Major companies.
Shout out to my boy Choice the Chance, Keon on the super chat. Appreciate you, brother.
Keon, my brother.
Yes, another glorious episode of Market Mondays. Ian, you're a legend. Shout out to the whole Red Panda family. Shout out to Jury.
I appreciate y'all.
Shout out to everybody, all the EYL University members. Yeah. So once again, if you're interested in joining the Red Panda, the sale is over, but you can still join, and we have the link in our description in our bio. Ian does as well, and then EYL University. Once again, starting May 1st, in 3 days, the price goes up. Right now, it's $149 for a year, and that's on a discount. The code is EYL149. Go to EYLUniversity.com. I'll put it in here, and if you type in that code, then you get access to our private Facebook group. You get access to the workshops. You get access to Zoom, all the stuff. And it's
and
1
all
year.
the webinars that we have already. It's
all
like
the previous, 60.
Over 60.
But that's going up. And don't forget, this week we got a lot of stuff. Lord of the Slums. You know him? You ever? Lord of the Slums is huge. He's huge. You know Envy, obviously, right?
Yeah.
And his partner is Caesar.
Yeah.
So Caesar's best friend is Lord of the Slums. So Caesar owns like 700 units.
Last time we said 700, he was like, "Yo, guys, don't try to play me. It's 1,100 now." So
yeah,
numbers went up.
But Lord of the Slums owns like 500 units. He owns like 500 units.
Yo, Patterson, New Jersey, pretty much they run the show out there.
But the thing I love about Lord of the Slums, he's the most nondescript person you ever meet. He's extremely humble. Drives a Toyota Tacoma.
The hatchback.
Yeah, like you would never even know, like just laid back, never, no jury, none of that. And
whole lot of game.
Yeah.
I gotta check them out. That's a ton of units. That's a ton of units to have. But even in real estate and investing, same thing. Like when you guys are making those kind of block orders, there's certain numbers that you need to hit. Real estate, like that's a good amount of doors. Like if you get to 100 doors, that's amazing. So to be at 500.
Yeah. So do you have anything that's coming up this week that you want to make the people aware of?
I'll be on IG Live, all in the videos, dancing. And then I'll probably do a short free training tomorrow, looking at the market real quick. But yeah, you guys stay tuned on Instagram and Facebook, and I'll be popping up doing a couple things. So
yeah. Once again, brother, it's a pleasure as always. Once again, I hope everybody took notes, and we'll be back next week. We got another shout out.
Shout out to the Leak Life.
Shout out to the Leak Life. Appreciate it. We'll be back next week. You had a question?
Yeah.
I got Dwight. What up, man? Shout out to all my Indiana people, to all my family, to my dad. I don't think I cursed this episode, so I'm doing better. Thank you.
Okay. Yeah. Any Red Panda questions? Email.
Yeah, email me.
Email. But yeah, Ian, we don't want to hold you up. I know you probably got to spend some time with your son.
Yeah, I got to Alexander.
Just relax a little bit. So yeah, man, I'll talk to you. We'll see you next week.
Thank you. Love y'all. Peace.
All right, bro. Appreciate you. Yeah, so EYL University, once again, don't forget this week we have We have a bunch of stuff happening this week. Shout out to my man MG, the mortgage guy. He has a market update. If you're in the Bay Area, he's doing a real estate market update tomorrow for our real estate group on 4:30 p.m. Eastern Standard Time. And then Wednesday, Brand Resumes, Brandon, EYL alumni, Brandon Mitchell will be doing a webinar about re-entering the job force for EYL University.
Yep.
And then Friday is a break bread session at 2 p.m. with Matt. And that's, like the real estate group. That's when they get together and just kind of like
going off in
discuss different topics.
Yeah.
Facebook real estate group is lit. It's
lit.
It's lit, and it's only getting bigger and bigger. So once again,
it's crazy.
The
man.
code is EYL149. EYL149.
Yeah, shout out to the bro Matt. Matt's going on a virtual city tour.
Matt's a legend.
He he was in Philly already. He was in Atlanta. Now he's going to the Bay. Catch this guy on our private Facebook group, man. It's insane. The knowledge is incredible. And what I'm learning now is that even if the community has so much knowledge to share, that I'm learning from them. So that's the beauty of it, man. So everybody that's a part of it, shout out to y'all. Everybody that's joined our movie and our book club, that has been amazing. We're learning a lot. I'm telling you, we're learning a lot in that. So we appreciate all the support and love.
A book and a movie club is part of the Facebook group.
Yeah. It's going crazy.
But yeah, man. Once again, we appreciate y'all. So, tomorrow.
Oh, we forget that.
Tomorrow, episode 77 comes out.
Tuesday at 5. Y'all know how that works. Y'all listen, the information is on us, applications on you. We stand by it. EYL is a brand name. Believe in it.
Episode 77 out tomorrow. Very important information, guys. Peace.
Peace.